Welcome to the Deep Dive. A special welcome to everyone joining us today from Stock Explorers. We're diving into, well, a really fascinating story today. The total transformation of BioSig Technologies. That's ticker BSGM. Honestly, you might need to forget almost everything you thought you knew about them. Our goal here is to cut through all the hype, all the noise, and give you a really clear picture of this huge pivot. We're talking about a company that was, frankly, struggling in the medical device space, and now suddenly, they're aiming to be a big player in real-world asset tokenization, RWA. It's all centered around this major partnership with Streamex, tokenizing gold bullion, and backed by a massive, and I mean massive, $1.1 billion financing deal. So the big question we're tackling is, can this moonshot actually work? And maybe more importantly, what does it mean for you if you're thinking about investing? We'll break down the new business, the potential, the very real challenges, and what you absolutely need to watch. Should be insightful.
Yeah, what's really striking here is just how bold this pivot is. It's not just changing directions slightly, it's a complete reinvention, like you said, from medical diagnostics to digital assets. And they're targeting the commodities market that's trillions of dollars. With that $1.1 billion finance package, well, it definitely looks like one of those high-momentum plays we see sometimes. We should definitely compare it to what else is happening in blockchain and RWA.
Okay, let's unpack it then, this transformation.
Yeah.
The core of it is this definitive share exchange agreement with Streamex Exchange Corporation. Now, it's important to understand this isn't really a merger of equals. It's effectively a reverse takeover, an RTO.
Right, and that difference is huge for investors.
Exactly. Streamex becomes a subsidiary, technically, but here's the crucial part. The original Streamex shareholders, they now own 75% of the combined company.
Leaving the old BioSig shareholders with just 25%.
Yeah, a massive shift in ownership and control, which is why the Streamex co-founders, Henry McPhee and Morgan Lekstrom, are now CEO and chairman.
It signals a completely new company, essentially, just using the old BSGM ticker. And the objective, the big picture goal here, it's incredibly ambitious. They're talking about revolutionizing commodity finance, bringing that estimated $142 trillion global commodities market on-chain using tokenization.
So making it digital, basically.
Exactly. The idea is to tackle those old problems in commodity trading, lack of liquidity, really high costs, slow settlement times, stuff that's plagued the market for ages. Imagine trading gold or copper almost instantly, like sending crypto. That's the vision.
And they're positioning themselves as a first mover, aren't they? The new BSGM wants to be the main publicly listed company for RWA tokenization, starting with gold. And being public gives them advantages, right?
Yeah.
Easier access to capital, more transparency.
And liquidity for shareholders. That's a big one.
Which brings us to that phrase you hear sometimes, StreamXX or BSEST.
Yeah, that really captures the feeling.
It stems from that huge dilution for the original BioSig investors.
Yeah.
It's very much an all-or-nothing play now.
It really is. High risk, high potential reward.
Right.
Binary. So, okay, how does it actually work? Let's use gold as the example, since that's their starting point. First step, asset custody and verification. They acquire physical gold bullion, real gold, and it's held in secure vaults, importantly, audited by third parties. That physical backing is key for trust.
Got it. Physical gold first.
Then they create what's called a mint account on the Solana blockchain. Think of it as the digital blueprint for the tokens, like Streamex Vaulted Gold Series 1.
Okay, on Solana.
Then comes the actual token issuance, minting. Streamex creates SPL tokens, that's the Solana standard. Each token represents a direct claim on a specific amount of that vaulted gold. Maybe one token equals 1 gram, for example.
A digital representation of physical gold.
Precisely. And finally, distribution and trading. These tokens go into investor wallets. Then they can be traded 24/7 on the Streamex platform or maybe other exchanges later. Settlement happens almost instantly on the Solana blockchain.
That instant settlement sounds like a big deal. And you mentioned Solana. Why Solana specifically? I mean, why not Ethereum, which people know more? You hear about Solana's speed, like 50,000 transactions per second, super low fees. Is that the critical advantage here for commodities?
Yeah, that's pretty much it. It comes down to scale and cost. Commodity markets, they involve huge volumes, potentially high-frequency trading. Solana's architecture is just built for that kind of speed and low cost per transaction. Ethereum, while it's getting better, its current speeds and especially the gas fees, they just wouldn't work efficiently for this kind of high-volume market.
Makes sense. Speed and cost are crucial.
Definitely. And look, the long-term plan goes way beyond gold. They talk about endless possibilities, tokenizing other things that are traditionally hard to trade, like silver, maybe industrial metals, lithium is a hot one, even agricultural goods.
So gold is just the starting point, a proof of concept.
Exactly. It's a smart place to start. Everyone understands gold. And another really unique thing is their corporate treasury strategy.
Yeah.
Unconventional. They plan to hold significant quantities of gold bullion themselves and actually denominate most of their balance sheet in vaulted physical gold, not, dollars or fiat currency.
So holding gold instead of cash. Why?
Two main reasons. One, it shores up their balance sheet, potentially hedges against inflation or currency issues. Two, that gold directly collateralizes the tokens they issue. It creates this really strong, tangible link between the digital token and the real asset.
Interesting. And how do they plan to actually make money from all this?
Several ways. They anticipate multiple revenue streams, things like tokenization as a service fees, charging others to use their platform, transaction fees when people trade on their exchange, custody and management fees for looking after the physical gold, maybe lending and financing revenue using the gold as collateral, and possibly even selling data and analytics based on the trading activity. It looks like a well-thought-out model aiming for recurring revenue.
Okay, that makes sense. But all this ambition needs fuel, right? Let's talk about that $1.1 billion financing package. That number is just huge.
It is huge, but it's important to understand how it's structured. It's not just a check for $1.1 billion day one. There are two main parts. First, up to $100 million in senior secured convertible debentures.
Okay, what does that mean in plain English?
It's debt. Senior means they get paid back first if things go wrong. Secured means it's backed by assets. Convertible means the debt can potentially be turned into stock later, which means more dilution. It has a 24-month term, 4% interest. But here's a kicker. An 18% default interest rate.
18%, that sounds severe.
It is very punitive. It shows the creditors are playing hardball and adds a lot of pressure on the company to perform. Defaulting would be incredibly costly.
Right, and the other part, the bigger jump.
That's the $1 billion equity line of credit, or ELOC,
Right.
spread over 36 months. An ELOC basically gives the company the right, but not the obligation, to sell new shares into the market over time, up to that total amount.
So they can raise cash by issuing new stock whenever they need it.
Exactly. It provides flexibility. But the flip side is it creates this constant potential for dilution. Every time they draw on the ELOC, they issue more shares, which can lower the value for existing shareholders. It's a persistent overhang.
So significant potential dilution from both the debt conversion and the ELOC. Investors need to be very aware of that.
Absolutely critical to understand.
Now, who's involved in arranging this financing? You mentioned Cantor Fitzgerald & Co. and Clear Street LLC. Are these big names? Does their involvement matter?
Yes, it matters quite a bit. Cantor Fitzgerald, in particular, is a well-respected name on Wall Street. Having them involved as placement agents lends significant credibility. These firms do their homework, they conduct due diligence, their reputation is on the line too. It suggests they believe there's a viable business here, likely targeted at sophisticated professional investors.
So it helps counter those pump and dump worries you sometimes hear with these kinds of dramatic pivots.
It definitely helps. Institutional involvement adds a layer of validation. Doesn't guarantee success, of course, but it's a positive signal. And where's this money going? Primarily, it's to launch and rapidly scale up that gold-backed treasury strategy we talked about. The idea is to create this self-feeding loop. Raise capital, buy gold, tokenize it, attract users, generate revenue, buy more gold. Their stated goal is incredibly ambitious, become one of the largest public holders of gold bullion on NASDAQ.
Wow. Okay. Are there hurdles to getting this financing finalized?
Yes, several key conditions. The deal is expected to close around October 7th, 2025. But the biggest hurdle, arguably, is getting shareholder approval. Because of that massive dilution from the 7-5-25 split and the financing itself, they need the existing shareholders to vote yes.
It could be tough.
It could. And they also need the SEC to register the new shares before they can be freely traded. So shareholder vote and SEC registration are key milestones.
Okay, so who's leading this charge? You mentioned the Streamex founders taking over.
Right. The new executive team is Henry McPhee as CEO and Morgan Lekstrom as chairman. The former BioSig CEO, Anthony Amato, is staying on the board. But a really key hire, I think, is Mitch Williams as Chief Investment Officer, CIO.
What's his background?
He's a seasoned Wall Street guy, comes from Wafra Inc., and before that, Oppenheimer Funds. Serious asset management experience.
So he knows traditional finance.
Exactly. His role is crucial for managing that big gold treasury strategy and, importantly, bridging the gap between traditional finance and this new world of tokenization.
And what about advisors? I heard they've assembled quite a team.
They have. Some are calling it a dream team, and Honestly, looking at the names, it's pretty impressive. They've brought together experts from 3 really critical areas.
Okay, like who?
Well, first, you've got DeFi and RWA experts, Trevor Bacon and Kellen Grenier. These guys co-founded Parkle.
Oh, yeah, the real estate tokenization platform on Solana.
That was successful.
Right.
Very. So they bring proven Solana and RWA experience. Then you have absolute titans from the mining and commodities world. Sean Ruzin from the Osisco Group, Frank Giustra.
Frank Giustra, like Gold Court founder Frank Giustra, Wheaton Precious Metals.
The very same. Having names like Ruzin and Giustra involved gives them incredible credibility in the commodity space and, crucially, access. Access to the actual physical metal.
Wow, that's serious backing. And the third group?
Capital markets experts, which includes the CIO, Mitch Williams, and also Matthew August from Atlas Capital Partners.
So, DeFi tech, real-world commodities, and Wall Street finance. They seem to have covered the bases.
It looks like a very deliberate strategy to bring all the necessary expertise under one roof. The integration could be a challenge, coordinating all that talent.
True, a lot of strong personalities, perhaps.
Potentially, but the combined expertise is undeniable.
Okay, let's zoom out to the market itself. RWA, tokenization. It feels like everyone's talking about it lately.
Absolutely. There's a definite buzz. People were calling it the RWA gold rush. You see these huge projections. Some analysts think the market could hit $16 trillion by 2030. Whether that happens or not, the interest is real.
Even big players like BlackRock are exploring it, right?
Yeah, when giants like BlackRock start talking about tokenization, it really validates the space. It's not just crypto-native hype anymore. And interestingly, BSGM's approach focusing on compliant, physically backed assets seems to align with some of the forward-thinking commentary coming out of regulators like the SEC.
How so? Could that give them an edge, like a regulatory moat?
Potentially. By focusing on tangible assets like gold and aiming for compliance from the start, they might navigate the evolving regulations more smoothly than projects dealing with more complex or purely digital assets. If they get the compliance piece right in this murky area, it could definitely be an advantage.
What about competitors? Is anyone else doing exactly this?
The RWA space is getting crowded, but it's still quite fragmented. Especially in commodities tokenization, it feels nascent. BSGM seems unique in its combination of being publicly listed, having that sharp focus specifically on commodities starting with gold, the gold-backed Treasury strategy, and that integrated team we just discussed.
So they have some differentiators.
They do, on paper at least.
And here's the thought. BioSig, the old BioSig, had expertise in AI and signal processing for their medical devices. Could that be useful somehow? Is it just wasted now?
That's a really interesting point. It might seem unrelated, but those deep tech skills could be a latent asset. You could imagine future applications. Maybe AI-powered oracles verifying asset data on-chain, algorithmic trading strategies, sophisticated risk management tools.
So maybe not entirely wasted potential there.
Possibly not. Down the line, it could become another competitive edge. It also connects in a way to that idea of professionalizing treasury management, like the Ethereum Foundation is trying to do. BSGM is doing a version of that, but anchoring it to gold, arguably a more conservative, robust approach. It's a strong marketing angle. Old world trust with new world tech.
Okay, the potential is clear. The team looks strong. The market seems receptive. But we absolutely have to talk about the risks. This sounds incredibly difficult to pull off. Let's get into the credible bear case.
Absolutely essential. And the biggest risk, hands down, is execution risk. This isn't just launching a new product, it's a total reinvention. Building a robust, secure tokenization platform, that's a massive tech challenge. Managing the logistics of physical gold sourcing, vaulting, auditing across different places, hugely complex operationally.
And getting customers, right. Convincing miners or traders to use this new system instead of how they've always done things.
Exactly. That's a huge business development hurdle. The execution challenge across tech, operations, and business development is immense. No matter how good the team is, this is hard.
Okay, execution risk number 1. What else?
Financial structure risk. We touched on it, but it needs emphasis. That 75-25 split means severe dilution for legacy holders right off the bat. And that $1 billion ELOC, it's a cloud hanging over the stock. Constant potential for more shares hitting the market.
Plus the debt, the secured convertible debentures with that high default rate.
Right. It adds financial pressure and risk if they stumble.
Which leads to market and valuation risk.
Precisely. The current stock price and valuation, it's highly speculative. It's based on the story, the future potential, not on current financials or fundamentals. Remember, the old BioSig had a huge accumulated deficit, something like $258 million, and was struggling to meet NASDAQ listing requirements. The current valuation is pricing in a lot of future success that hasn't happened yet.
So pure narrative play right now.
Largely, yes.
And what about those pump and dump or rug pull fears people might have with crypto-related ventures?
It's a valid concern in the space generally, but as we discussed, the involvement of firms like Cantor Fitzgerald does provide a counter-argument. They have reputations to protect. It suggests a level of scrutiny that makes an outright scam less likely, though not impossible.
Okay. Any other major risks?
Definitely regulatory and compliance risks. This whole area, tokenizing real-world assets, especially commodities like gold, sits at a complex intersection. You've got securities law, commodities law, crypto regulations, AML KYC requirements.
It's different in different countries.
Exactly. Global jurisdictional complexity. Are these tokens, securities, commodities, something else? The rules are still being written. Navigating that successfully is a huge ongoing challenge.
Okay, a lot to unpack there on the risk side. So if you're watching this company, what are the key things to monitor? What tells you if they're succeeding or failing? Let's talk key milestones first. What should people look out for in the near term?
Okay, first up is that shareholder vote on the merger and financing. That's make or break. Needs to pass.
Right, assuming it does.
Then the successful financing close. They're targeting around October 7th, 2025. Getting that money locked in is critical.
Then the actual product.
Yes. Platform launch. They're hoping for the end of 2025. Seeing the tech actually go live will be huge.
And finally, getting business.
The announcement of the first major partnership. Signing up a significant commodity producer or trader would be a major validation point. Those are the big checkpoints in the coming year or so.
Beyond those milestones, what metrics really show if the business is working, not just the stock price?
Good question. You need to look past the share price volatility and focus on the key performance indicators, the KPIs, of the actual tokenization business, like total value locked, TVL. How much actual asset value is secured and tokenized on their platform. That's fundamental.
Okay, TVL. What else?
Transaction volume. How much value is actually being traded on their exchange? Is it growing? The number and diversity of tokenized assets. Are they successfully expanding beyond just gold to other commodities, active users, or wallets? How many people or institutions are actually using the platform? And ultimately, of course, revenue and gross margins. Are they actually making money from fees? And is the business profitable? Those KPIs tell the real story.
Got it. And their strategy seems to be leveraging the NASDAQ listing, the big name advisors, that whole first mover gold-backed narrative.
Yeah, it's a powerful story they're telling to the market, designed to attract attention and investment.
But can they keep that first mover advantage if others jump in?
That's the challenge. They need speed. Rapid execution is key. They need to build a network effect, get enough producers and traders on board that it becomes the place to be. Continuous innovation, new features, new assets, and creating switching costs, making it hard for partners to leave once they're integrated. It's a race against time and potential competitors.
So wrapping this all up, it really does sound like a binary bet, doesn't it?
It absolutely does.
On the one hand, the bull case. Huge market, unique public company structure for RWA, seemingly world-class team, big institutional names involved, maybe superior tech with Solana and that gold backing. It's compelling.
Very compelling.
But the bear case is just as strong, maybe stronger for cautious investors. Potentially catastrophic dilution for shareholders, massive execution risk across the board, a valuation that's way ahead of fundamentals, the company's prior history of financial trouble, and those complex regulatory hurdles.
That sums it up well. High potential, high risk.
So maybe a final thought to leave our listeners with. This is absolutely not your standard value investment. Don't approach it like that. It's a calculated gamble, a bet on a potentially revolutionary vision, yes, but one where success depends almost entirely on flawless execution in a really tough market.
Couldn't agree more. Keep thinking critically, do your own research, and watch those KPIs and milestones we talked about very closely. Diligence is key here.
Absolutely. Well, thank you for joining us on this deep dive into BioSig Technologies. It's certainly one to watch. Please remember to subscribe, give us a like if you found this useful, and hit that notification bell so you don't miss our next deep dive into complex market stories.